Hey guys, it's been a pretty interesting morning with the triple Qs and the NQs. We had a CPI report came out in line, and that was enough to push the markets up to new highs. So let's take a look at the charts and how we've been sort of focusing on this and playing with this thing today. The alert that went out earlier was for a level that is lower than it is right now, but we're still going to hold that alert. And I've got another idea that I'm looking at for the rest of the trading day. So let's have a look at the charts. Here you see it. We had the bump this morning, and sort of what a lot of people thought was a lackluster response to the CPI number, but I think for me, it's a response that I was pretty comfortable with. I thought that this was the kind of thing that shouldn't move the market or rattle the market too much, and it didn't, and we wound up pretty much right at the upper end of the value zone for the day. You guys know that the move between the central pivot and the first resistance, that sort of defines what the value range is. We would expect things to come back down again a bit, not necessarily going to happen. So if we get the move that I was anticipating in the alert that all you folks got on the alert service, right, then we would be looking for a replay of this. So this was the first trade today, was from this level down here up into this pivot line. That was a nice setup, especially on the future side of things. So you were moving for about, let's see, about $1 on the trade there on the triple Qs, and a pretty significant move on the futures then as well. So if you got it, great, and if you didn't, get ready for the next one, because I'm still looking for a retracement here, maybe not down as far as we thought originally. So when I sent the alert out, I was hoping that we were going to get a move back down into here, because that gave us a really nice overlap with a bunch of confluence. So we had a lot of things that were indicating that a move back down into that level was going to give us a nice inflection point. That's a 38.2% fib retracement. It gets you down into the session VWAP, gets you right to the session VWAP, that institutional bellwether. It gets you down to the retracement level, right? So you've got this level that we identified from earlier trading, and of course it gets you into the 2 standard deviation envelope, and everything just lines up perfectly with the volume by price threshold and everything that we were looking at. But right now it appears that we might be headed for something that's a little bit more in this area. So if we get a move up and out now that comes back down and gets into this box, I'll be looking at this 396.64 as a trigger area for the Qs and for the NQ. And if we keep moving higher, then I'm going to look for price to settle in. I'm not going to be gunning for any trades here. We want to see it move higher and then come back down again. And if it stops right there, then I'm going to look for this thing to start trading in a box right up in here that inflects on that 397.27, somewhere in there, always ish, right? Not exactly 397.27. If you're looking for something to always hit an exact level, then a lot of times you can wind up missing trades, missing targets, all that kind of stuff. Sometimes if it's a couple pennies away from the target and you've got your eyes on it, just pull that target line and grab it. If it's not zooming towards your target, it's better to get a little bit of a slip. 4 or 5 cents is nothing on a trade like this. It's better to get a little bit of a slip than it is to get a reversion that goes back, all the way to your break-even level. That happened to one of my friends today on a trade that he was in. But that's all right. It's still part of the discipline. As long as you're not losing money, it's all good. And other than that, I think that we've got a fairly good shot at a couple things going on here in terms of getting a fib retracement back into the lower level here. We are right now on the heels of an S&P reversal. So this little reversal here, if you guys are using that trader clock, then you know that if you're looking at the time zones that we've got identified on that thing, that we just got through a reversal period, and that reversal period then took that pullback and sent it higher again. Next one we're going to look for is when the bond market closes, and that'll be at 3 o'clock Eastern, right around noon our time. All right, so I think that is pretty much all that I have for you guys right now. If something's on the radar later on, I will send another alert. And in the interim, I think that just sort of stay the course, look for these things to line up and start trading sideways. If we get a trending move, let's wait for the pullback, get a new fib ratio established, make sure that things are coming into those confluence zones, and I think it'd be good to go for the afternoon. All right, have a great rest of your trading day, and I will see you all tomorrow, if not later today. Take care.